Hi, this is Stuart Wemyss and welcome to the Investopoly podcast. My goal is to give you simple, easy to understand strategies, insights and tips to help you master the game of building wealth. And in this episode, I'd like to talk to you about Sydney versus Melbourne. Now, of course, I'm only talking from an investment perspective. If we're going to talk about, which is the best city, I think it's a moot point. Of course, Melbourne is always going to be, win that argument. But Sydney and Melbourne have produced some really robust capital growth rates over the last 4 decades or so. So from a median house price perspective, the growth rates are relatively similar. However, Sydney's property is less affordable than Melbourne. So the actual median price is a lot higher than in Melbourne. And I wanted to talk about some of the reasons why that might be the case. And consider from an investment perspective, what can we learn from that? What takeaways can we learn from that? And then also consider, will that price gap, will that perpetuate? Will it always be as significant as it is, or will that price gap slow? So the first thing that I did is drew a chart of Melbourne's median house price versus Sydney since 1980. Just look at the relative values, and I'll share that chart with you right now. So as you can see, Sydney's median house price is 1.64 times higher than what Melbourne is. So it's quite high in terms of historical standards. The average is 1.36 times. So Sydney's median house price is 36% more than what Melbourne's is on average. And you can see I've drawn some trend lines here. So it certainly shows since the mid-80s through to the early 2000s, the trend was that Sydney became more expensive relative to Melbourne over time, but not significantly so. You can see since early 2000s through to around about 2010, 2011, the relative value of Sydney fell, in fact, and that's probably as a result of Sydney prices not doing much during that period, whereas Melbourne's were advancing. But conversely, we've given up all that growth really between 2011 through to 2023. Sydney is now a lot more expensive than what Melbourne is. And it's this price differential that I'd like to consider. So population can really have a big impact on property prices. A growing population obviously enhances job opportunities. It fuels economic expansion as the economy is growing. And of course, it boosts demand for housing. You've got more people, they need more houses to live in. Major capital cities tend to attract higher paying jobs. And you just have to look to the ASX 100, so the top 100 listed companies in Australia in terms of where their head offices are located. 72 out of the top 100 companies are either located in Melbourne or Sydney. So 31 head offices in Melbourne, 41 in Sydney. And obviously that doesn't include overseas companies, so global businesses as well. The same sort of thing happens. They tend to either flock to Melbourne or Sydney just because there's a greater pool of people to potentially hire from those cities. Now, we know that higher income earners drive property prices as well. So if we're investing in an area that attracts a lot of high income earners, of course, property prices are going to benefit from that. Now, what I did is I drew a chart of Melbourne and Sydney's property prices, which I'll share with you now. You can see in 2001, Sydney's population exceeded Melbourne's by about 18%. But by 2021, that gap had narrowed to just 6%. And ABS predicts that Melbourne's population is expected to match Sydney's by 2036. And then Melbourne will continue to exceed Sydney's. So maybe some of that price gap between Melbourne and Sydney can be explained by the relative populations. That is, over previous decades, Sydney's population has been materially higher than Melbourne's, and as a result, maybe have attract greater employment opportunities. But that gap is shrinking, and it's projected to continue to shrink. And at some point, Melbourne, 2036, according to the ABS, Melbourne will be larger than Sydney. So that might help us understand, maybe will this price gap persist? Maybe not, due to population. The reality is, I think the price gap is driven mostly by two distinctive geographical features. That is, Sydney has two distinct geographical features that contributes to the increased median price. Firstly, Sydney is surrounded by national parks and mountains, so it poses a big challenge to a growing population. It can't spread out like Melbourne can. Melbourne is quite spread out already, and there's available land, surrounding Melbourne, so it can continue to sort of spread out if it needs to. Of course, infrastructure can be a big problem, a big challenge with that, but it can do that. Secondly, Sydney's property market is significantly influenced to its proximity to water and waterfront properties and waterfront views. The harbour obviously is the standout here. It stretches really from Watson Bay all the way down to Melrose Park. And of course, there's lots of suburbs that along the northern and southern coast of Sydney, which also provide either water views and or very easy access to renowned beaches like Manly and Bondi. And in fact, Knight Frank produces a waterfront home study every year. It's a global study, and they concluded that waterfront homes in Sydney command a 118% premium compared to properties that don't have those attributes. So I think that's probably the cause of the big price gap between Melbourne and Sydney, and of course we can't change those geographical factors. Over the years, Sydney-siders have complained about traffic and travel times and congestion and those sorts of things. And of course, the problem is you've got a body of water that sort of splits most of the city, and you've only got one tunnel and a couple of bridges to get across that water. So if you're going from one side of the city to the other side of the city, that can be a challenge. However, anyone that's driven in Melbourne over recent years will know that our traffic is terrible as well. You've got the government's big build going on that is nothing but problems in terms of creating more traffic problems rather than solving them. I think with the projected increase in population in both capital cities, congestion is here to stay. And if anything, I think, again, in both capital cities, it will mean that properties that are in close proximity to work and entertainment precincts, which tend to be in and around the CBD, will command a higher premium than what they have, say, 20 years ago. So those blue chip suburbs, I think, will start to add greater utility compared to 20 years ago, just because of that increased congestion. I think it's worth talking about state taxes and that relate to property. So that's land tax and stamp duties, and then the underlying health of each state government as well. Mainly because Victoria's debt is projected to rise to around about $165 billion over the next 3 years, and it's undoubtedly going to put strain on the state budget. And it might be tempting for the government to raise property taxes even further. Victoria's announced the introduction of a temporary COVID debt land tax surcharge, which will see a lot more people pay some level of land tax. Starting from next year. The bills will start to go out early next year. That's cause for concern, I guess. What happens if Victoria, and it will be tempting for them to continue to increase property taxes in order to deal with that debt, and what impact will that have on the property market, as well as if the state government gets into some financial strife, what impact will that have? Well, I think the population growth over the long run will sort that issue out in terms of dealing with those debt levels. Property taxes tend to have a short-term impact, but don't tend to have too much of a longer-term impact, mainly because they're a moving feast. If a government introduces an unpopular tax, quite often they will lose government in the next election, and the replacing government will repeal that tax or wind it back. So I think taxes will continue to rise as a general theme in all states, But you can look to New South Wales at one point had a vendor stamp duty. So you had to pay stamp duty when you actually sold your property, as well as the purchaser paying stamp duty. And that was only in force for a couple of months. It was a stupid tax and got repealed very quickly. Hasn't really upset Sydney's growth rate over the long run. So I acknowledge that those factors exist, but I don't think they're going to be too much cause for concern. So what can Melbourne investors learn from this analysis? Well, firstly, Melbourne looks relatively cheap compared to Sydney, and it's relatively more affordable. So that is a investment grade house or an investment grade apartment is a lot cheaper in Melbourne than it is in Sydney, despite the two having very similar capital growth rates. So your investment return will be the same. It's just the amount you need to invest to get a good quality asset is a lot lower. The second thing I think we can learn from this analysis is that properties with unique features create scarcity and likely mean that you will enjoy better growth rates than what the average is. And so it's good to then think about, well, how can you buy a property in Melbourne that has a point of difference, has some sort of uniqueness or scarcity that's going to add to its investment quality? Well, the first thing you can look at is views. So there's some properties that offer panoramic views over some really lovely parks that exist in Melbourne, like Royal Botanical Gardens if you're in South Yarra, Albert Park Lake if you're in Albert Park or Middle Park, Fitzroy Gardens if you're in East Melbourne. You know, there's some lovely properties that have great aspect over those sort of gardens, or even there's some older style apartments that might have a cityscape or even over Yarra River or views over Port Phillip Bay. So that adds some uniqueness in terms of the view of the property. It's true that some architectural styles in certain suburbs outperform, and that's true, I think, in most capital cities, but also in Melbourne. So in some suburbs, Victorian era style properties tend to perform quite well as investments, or Art Deco buildings can outperform. Again, it can create a scarcity sort of value. Proximity to shopping strips or lifestyle hubs can be really valuable. So areas with a really rich cafe culture, lots of vibrant dining options, entertainment opportunities, you know, cultural venues like theatres and galleries and those sorts of things tend to drive demand. And there's, you know, a few areas in Melbourne where there's some really lovely shopping strips that offer all those things that are highly sought after. Of course, there's always premium streets in every suburb. So most blue chip suburbs, there's 4 or 5 or 6 streets that are considered to be premium, and again can create some scarcity because, you know, everyone wants to be in that particular location, and that can be great. And lastly, education, so schooling. So it can either be a property in a public school zone of a very well-regarded public school, you know, that can certainly drive capital growth, or proximity to prestigious private schools as well. Schools in Melbourne can have a really big impact on property price growth. So to wrap this up then, I believe Sydney's geographical characteristics will likely maintain its price gap with Melbourne. So I don't think property in Melbourne's ever going to be as expensive as it is in Sydney. But it's interesting to note that in the cycle, Sydney is relatively more expensive than Melbourne by historical standards. And if you overlay then the population, two things, the projected population growth, that is that Melbourne's expected to have greater population, although it can better accommodate that population than Sydney can, just because of those geographical elements. And the second thing is that Melbourne has been a relative underperformer as well. So if you look at the capital growth rates over the last 10 years, in Sydney it's north of 8%, where Melbourne's around 5%. And it's particularly stark over the last 5 years, where capital growth in Sydney has been 6%, where it's only been 2% in Melbourne. So Melbourne has a bit of making up to do. When you look over 40 years, Sydney's capital growth is 7.6 versus 7.3 in Melbourne. So not that big a difference. And in fact, the relative underperformance for Melbourne over the last 10 years can probably account for that relatively small 0.3% difference. So we can conclude that both markets are very good investment grade markets, but maybe Melbourne looks a little bit cheaper and more attractive, and certainly more affordable from a dollar value perspective than Sydney, although Sydney's properties is probably always going to be more expensive than Melbourne. Okay, that's it for me for this week. Until next week, bye for now.